Imagine waking up one morning and finding out that overnight the rules have changed. Not because you missed a payment or broke a law, but because the government decided that simply living in your own home now carries a price tag you never agreed to pay. An extra £43,000 a year every year just for existing in the house you already own. Not a mortgage payment, and not an improvement cost, a tax that never stops coming as long as you have a roof over your head. It sounds impossible. Maybe even absurd, but that's exactly the kind of system being discussed by policymakers right now. One that could transform home ownership across Britain into something entirely different from what it's ever been. For millions of people, this isn't some distant hypothetical. It's a potential financial earthquake hiding behind a few lines of economic jargon. The story began quietly, tucked away in reports from respected outlets like The Times and The Guardian, describing how government officials are exploring what they call a modernized approach to property taxation. But the fine print tells a different story. The proposal would replace two familiar taxes, stamp duty and council tax, with a brand new system that looks simple on paper, but could end up costing ordinary families a fortune. Many of the people who would be hardest hit are not wealthy investors or developers, but everyday homeowners who bought decades ago and now live on modest income. They're people who worked hard, saved carefully, and expected that owning their home would one day mean security. Under this plan, that security could vanish overnight. Here's how the scheme works. At present, you pay stamp duty once when buying a property and council tax every year, based on valuations that haven't been updated since 1991. It's far from perfect, but it's at least predictable. The new plan would throw that entire framework out and replace it with an annual charge based on the property's current market value. In other words, the more your home is worth, the more you pay every year. And the definition of high value is far lower than most people realize. Early figures suggest the tax would begin at around 0.5% annually for homes valued above £500,000, rising to 0.8% for homes above 1 million. The problem is that in today's market, those numbers don't describe luxury mansions. They describe perfectly average family homes across much of London and the southeast. It's easy to think £500,000 sounds like a lot, but property prices in Britain's capital and its commuter belt are wildly inflated. The average London home already costs more than £660,000. That means a huge number of middle-class households, nurses, teachers, civil servants, would suddenly find themselves paying thousands of pounds every single year. Not because they've become richer, but simply because the housing market did what it always does. It went up. And that rise, which once felt like a reward for years of saving, would now be turned against them. Consider what that looks like in real terms. A retired couple who bought their home decades ago for under £200,000 might now see it valued at £700,000 or even £1 million. Their income hasn't changed, it's still their pension, maybe £20,000 a year between them. They own their home outright, they've already paid every tax due on it, and they budgeted carefully for a quiet retirement. Then this new tax lands, demanding a yearly payment larger than their entire income. £43,000 a year on a £6 million property. Even those with smaller homes could see bills in the tens of thousands. The result is simple. They'd have no choice but to sell, even if they never wanted to leave. And it's not just retirees who would struggle. Middle-income households with mortgages would be hit just as hard. Imagine finally saving up for a semi-detached in Greater London, stretching every pound to make the deposit. You're paying thousands a month on the mortgage, and now suddenly you owe thousands more every single year purely because of this new valuation-based levy. Home ownership, long seen as the foundation of financial stability, would become a never-ending burden. It gets worse. Insiders have suggested that the government might also pair this new annual tax with an additional charge when selling your home. So even if you're forced to sell because you can't afford the ongoing payments, you'd still face another heavy bill the moment you complete the sale. You'd be taxed for owning the home and taxed again for trying to escape the very system that pushed you out of it. That's not reform, that's punishment for playing by the rules. Supporters of the plan claim it's about fairness, that people living in valuable homes should contribute more to local services. But that argument ignores the reality that not all homeowners in expensive areas are wealthy. Many are asset-rich but income-poor people whose houses have appreciated beyond reason while their earnings stayed flat or vanished in retirement. They can't spend the value of their home without selling it, and they can't sell without triggering even more tax. It's a trap with no exit. Meanwhile, the ripple effects would distort the housing market itself. Think about properties priced just under the £500,000 mark. No one would want to push past that line because the moment a house sells for £1 more, it enters the taxable bracket. Sellers would underprice to stay under the threshold, while buyers would avoid anything that crosses it. The result would be a bottleneck, with prices artificially frozen below the limit and chaos above it. At the higher end, owners facing the new tax and potential seller's fee would try to inflate prices even more to offset what they'd lose to the government. That means £1 million homes could jump even higher while mid-range properties stagnate. The entire market would warp around political math rather than real supply and demand. And then there's the regional divide. In places like Doncaster, Hull or Sunderland, where average home prices are well under £200,000, hardly anyone would pay this new tax. Meanwhile, homeowners in London, Surrey, Kent and other high-value regions would shoulder nearly all of it. You'd have a system where families in the South Fund services across the country while those in cheaper areas pay almost nothing. Redistribution through the income tax system is one thing. This, however, would be redistribution through geography. It's easy to imagine the resentment it would spark, a north-south divide deeper than any before. There's also the moral issue. For decades, governments of every stripe have encouraged citizens to invest in property. They told people to buy homes, to view ownership as a mark of success and stability, and many took that advice. They sacrificed holidays, luxuries, and free time to pay off their loans, confident that by the time retirement arrived, they'd be secure. Now, with this plan, the same state that urged them to buy is preparing to penalize them for doing exactly that. It's not just financially ruinous, it's a breach of trust. Home is not a stock or a bond. It's where people build their lives, raise their children, and create memories. Treating it as a perpetual revenue stream erases that human reality. Imagine being 75, sitting in the home you've lived in for 40 years, and realizing the government now considers you a revenue problem rather than a citizen who's already paid your dues. You're told to downsize, move away, or start paying tens of thousands more every year, even though you did nothing wrong. That's not progress. That's cruelty disguised as policy. If introduced, this tax would also have political consequences that reach far beyond the property market. The proposal, believed to have the backing of senior figures in government, could alienate huge sections of the voting public overnight. Homeowners in their 50s, 60s, and 70s, people who vote in large numbers, would be furious. Younger families who've only just managed to buy would feel betrayed. Even lifelong supporters of the ruling party could turn away if they see their home turned into a liability by their own leaders. It's the kind of decision that could define an election, maybe even end a government's tenure altogether. And make no mistake, once a tax like this exists, it rarely goes away. History shows that when governments find a new source of revenue, they cling to it. Rates creep up over time, exceptions vanish, and what begins as a fair contribution turns into a permanent drain. If this property value tax becomes law, it could stay in place for generations, tightening every few years until owning a home feels more like renting from the state. Defenders argue it will create balance by reducing inequality, but the truth is, it would likely make them worse. Wealthy property investors and corporations can shift assets, restructure ownership, and absorb losses. Ordinary homeowners can't. The ones who get crushed are always the people with the least flexibility. Retirees, families, single-income households. The same demographic that followed every rule set before them will be the one punished hardest. And beyond all of this lies a quieter tragedy, the slow dismantling of the British dream of home ownership. For decades, people believed that if they worked hard enough, they could buy a place of their own and live out their days in peace. That dream is what kept countless workers going through recessions, austerity, and endless rent hikes. Turning that dream into a yearly bill strips it of its meaning. It says, you never really own anything, you're just borrowing it, at the government's discretion. The consequences would ripple across society. Housing markets would seize up, generational wealth transfers would collapse, local economies would suffer as retirees sell and move away. And yet, in meetings and consultations, the proposal continues to circulate, discussed not as an extreme idea, but as a realistic modernization. If this becomes reality, it won't happen with fanfare. It will slip quietly into a budget statement, wrapped in bureaucratic language about efficiency and reform, but its effects will be anything but quiet. People will open letters one spring morning and discover that everything they've worked for has been reclassified as taxable property wealth. For many, that letter will feel like an eviction notice written in fine print. What can be done? Awareness is the first step. Policies like this thrive on obscurity. They move forward because people don't notice until it's too late. The more homeowners who understand what's being proposed, the harder it becomes to push through unchallenged. Writing to representatives, organising locally, and making noise in public forums are not meaningless gestures. They're often the only things that stop bad ideas from becoming law. Because make no mistake, this proposal isn't a tweak. It's a fundamental shift in how Britain views ownership, fairness, and responsibility. It punishes those who planned ahead, destabilises the market, and deepens regional inequality. It's not reform, it's regression, with a modern name. If it goes forward, the consequences will reach far beyond the property market. They'll reach into the core of British life, into the meaning of home itself.